All right, today we've got on deck, we'll be talking about Social Security. Right up, we'll be going live to Antigua and Barbuda, and we'll be talking to the Actuary, Derek Osborne from Lifeworks Limited, the partner there, based in Nassau, Bahamas, of course. And then at 11 o'clock, we'll be joined by the Honorable MP, Shelia Rogers Webster. That's at 11 o'clock today. And immediately following our broadcast today, we'll be bringing you the opening ceremony of the 72nd meeting of the OECS Authority. That's the meeting of the OECS heads of government. And that meeting is underway in Montserrat. So let me go across to Antigua and Barbuda, where Mr. Osborne is attending a conference, and say very good morning to you, Derek Osborne.
Good morning, Keystone. It's a pleasure to be with you, and good morning, Anguilla.
All right. You're the actuary from Lifeworks Limited. You've done, and your partner, you've done all the work for the Social Security. You've been doing that for quite some time. We've seen the latest actuarial review that was done. It was, you did present to Parliament, and you also presented to of course, the board of the Social Security. That is the 12th actuarial review of the Social Security Fund as of the 31st of December 2020. And the actuarial opinion given by you and your partner on November the 12th, 2021. Just by way of background, the Anguilla Social Security began in January 1st, 1982, and it covers all employed and self-employed persons. There are two types of Social Security benefits: short-term benefits and longer-term benefits. The system is financed by contributions levied on employment earnings up to a wage ceiling paid by employers, employees, and self-employed persons. And any surplus funds needed to pay benefits are invested locally, regionally, and internationally in various types of securities and properties. Of course, Social Security makes the promise to former and current workers extending beyond the age of 60. So here is where we bring you in firstly, Mr. Osborne. The need for Social Security to be well designed, well governed, and properly administered. Why the need for the periodic actuarial review?
Thank you very much, Mr. Graves. And I'll start off by talking about the long-term nature of Social Security. If you think about the young man or the young lady who just left school a few months ago and started working, let's say they were 22, 23 years old, Social Security has made a promise to them that while you work, we're going to provide you with certain benefits if you get sick or if you have a baby. And when you retire, another 40, 45 years, we're going to be there for you to give you a lifetime pension. And so that's really a long-term promise. And so what we have to make sure today is that that promise can be met when it's each person's turn to get. 45 years is a very long time. And if you think about, the last 45 years, there have been ups, there have been downs, there have been going left and going right. So the future is uncertain. And so the role of the actuary is to assess the current state of the fund, to project the population, to project the economy, and to project Social Security income and expenses. And if there's a shortfall, or whatever the outlook looks like from a long-term perspective, to make recommendations to the government and the board as to how you can ensure that those promises that have been made today can be reasonably met in the long term. And so the Act requires that every 3 years an actuary is engaged, and the actuary comes in, looks at where the fund has been, look at where the fund is today, and then makes projections of 50, 60 years going forward, and in so doing prepares a report. The report goes to the minister, it goes to Parliament, and then ultimately the public gets a side of the report. And in this particular report, we make some recommendations to enhance the sustainability of the system. And so we can talk about that today, but it's a really important part of Anguilla society. Right? It's 40 years old a few months ago, and so it has a very good run for the first 40 years. But as we see from the report, the challenges lie ahead. Anguilla is no different from others in the Caribbean. We have very publicly Barbados and Grenada and St. Vincent all making reforms after having done reforms before. Anguilla has not made any major reforms after 40 years, and so it's soon time to assess where we are and to make sure that we can have a sustainable fund for the indefinite future.
And this leads me into something I want you to explain for me right up off the top before we get into the context and experience of everything flowing from the last actuarial review. It has to do with the policy recommendations for changes, suitable balance between benefit adequacy and financial sustainability for both current and future periods. I want you just to explain those two terms for me, the benefit adequacy and the financial sustainability within that context for current and future periods.
Right. If you think about the average human being, right, we would like to have large benefits. We want to be able to live very comfortably in old age. But that comes with a price, right? So if you think about saving for your own retirement, if you save a little, you're going to have a little in retirement. If you save a lot, you'll hopefully have a lot in retirement. And the same goes for a national pension system. So we have to find a way to balance the adequacy of benefits and the generosity of benefits with how affordable are the contributions for those who have to pay the bill. So the way the system works, it is partially funded. And so the contributions, people getting pensions today are relying partly on their own contributions, but also on the contribution of those people working today. And so it's like a generational transfer. And if we think about life in Anguilla and across the region, we're having smaller and smaller families. So if you think about a family with 5 children, it is not too difficult for those 5 children to support mommy and daddy who have no income. But a family with 2 children, or with even 1 child, it becomes more difficult to support the elderly parents if they have no secure income. And it's the same for society. It's the same for government and taxes. It's the same for Social Security and pension. So we need to find a way to have a large contribution base, as large as possible, to make sure the contributions and the input into the fund are significant and large enough to support the pensions going out. We are living longer as a people, and many of us are starting to work later and working longer. So we have to find a delicate balance between how much can employers afford, how much can employees afford to pay in order to provide a benefit that we can comfortably live on in old age.
Very well. Thank you very much. Let's look now at the context and the experience during the latest review period. Of course, we had COVID-19 income contributions based on the report fell by 23% over the 2019 collections. Estimated 32% of the reduction is nominal in keeping with the overall GDP. Hundreds of persons were unemployed in 2020. And the Social Security paid out $5.2 million in temporary unemployment benefits. Additional amounts were also paid out by government. It's interesting to find out, Mr. Osborne, how much. Do you have any idea of how much was paid out by the government? Even an estimation?
I really can't say. I'm not sure. If it was 5 million, I'm really not sure. But what we have clearly from what experienced during COVID, and this is really good on the government, where the government saw a need, Social Security was not meeting through its regular legislation, and quickly put in place an income support program for those workers who had lost their jobs and lost their secure income. And this is why Social Security has to be dynamic. And I mentioned earlier, so it's been 40 years, and there really has been very few changes made to the design of Social Security. But things have changed. We now have a large informal sector, a growing informal sector. Technology has allowed us to do things differently than we did 40 years ago. And so just as the government kicked in, to fill a hole and provide benefits, we need to find a way to reform Social Security and make sure it fills the needs of today. So one recommendation we would on is a formal unemployment benefit. Right? I think twice now has the government put in place a temporary program. So one recommendation to make it formal. Bahamas and Barbados have that program. It worked really well during COVID. It was there when people lost their jobs, and benefits were payable for the 13 weeks in the Bahamas, 6 months in Barbados. And so we are hoping that we could modernize Social Security's benefits and make it more sustainable for the long term.
Let's take a closer look now between 2018 and 2020. And these are bits of information I read from your review that the fund expenditure exceeded contribution income for the first time in 2019 after 37 years after its inception. The gap between contributions and expenditure even greater in 2020. The fund experienced a net surplus as a portion of investment income was used to help meet expenditure. That the number of Social Security contributors exceeded 8,000 in 2018 and again in 2019. The average yield on reserves over the last 3 years was 3.4%. And interestingly, and this is something that has to be highlighted and was highlighted in your report, administrative costs accounted for 27% of contribution income over 3 years. I just want you to zoom in on those areas for us and show the trend, show what was happening, and what was done, what needs to be done, and the way forward.
Forward, right? Yeah. So as I mentioned earlier, the review covers 3 years, and so we had 2 regular years, 18 and 19. Then we had the first year of COVID. So what happened just before COVID started was a milestone event for the Social Security Fund. Not a good one, but it was the first time that expenditure was actually more than contribution income. 37 years in, and this is probably a little bit longer than other teams in the region it took to get there. And partly because Anguilla, unlike others, had an age 65 as the pension age from the beginning, which is a really good decision made back in the day. And so we now have, so in the first 37 years, there was more money coming in contribution than was going out. And therefore, with investment income on the assets that accrued over those years, the fund was able to grow to over $300 million. What happened is that the gap, because of COVID and reduction in contribution income, benefits were still being paid, the gap widened in 20 and again in 2021, and so on. We have a situation where a large portion of the investment are with a loan to the government, with some historical factors there with the bank back in the early, probably 10, 15 years ago. And so the investment yield was low. So even though the fund is over $300 million, the investment income has been kind of subdued because of that large amount with a fixed rate of interest to the government. But the point here you made about admin costs, and we're small, and we understand that. But when you have a system that's taken 27% of contribution income towards administering and paying benefits and so on, it's like saying if I was saving for my retirement, a quarter of my savings was not going towards my retirement. And so we have to find a way to reduce the cost to a reasonable level. We think 20% of it, initially is possible, but some changes have to be made because what we want to see is more of the money that's coming in contribution really working, being invested, and going towards eventually paying pensions down the road. And in the report, at the end of 2020, the total money in the fund, Social Security Fund, was $360 million. So as I mentioned, for the first 37 years, there was more coming in than going out, and therefore the accumulation has led to a pretty large fund of $360 million 2 years ago.
So let's get into some of the main findings and the projection results. You found good level of benefit adequacy and income protection to most workers and pensioners. We also highlighted that the pension ceiling, the wage ceiling, has not increased since 2008, with only 11% of insured persons earning more than 7,000 EC dollars per month. Could you just explain that for the benefit of our listeners and viewers, please?
Sure. So all of our national insurance social security schemes in the region have a cap on covered wages, insurable wages. So the ceiling is another word used for that. It essentially says that the fund is really designed to ensure that it's a basic safety net that is provided for all Anguillians who work and residents who work in Anguilla. So the concern is really not for the ones who make $10,000, $15,000, $20,000 a month. We believe that they are able to fend for themselves. So right now, the ceiling, which was last increased in 2008, during really boom economic times, and salaries were escalating pretty quickly, it has not changed And what we see is that only about 11% of the workers in Anguilla earn more than that $8,000 a month. So sorry, $7,000 a month, $84,000 a year. And it's something we mentioned because a lot of people who make more than that would like to see Social Security cover a larger portion of their income. But we have to balance, again, is the scheme's purpose to provide for those that are most vulnerable and leave some room for the private sector to provide top-up pensions and other opportunities for higher income workers to invest. So the ceiling, it could be increased. Ideally, it should be increased by small amounts every single year. So as when lower income people get a salary increase, they pay slightly more in contribution, they get slightly more in benefit. We also want to find a way that higher income people, as their salary increases, we want to avoid the scheme becoming less and less relevant to them. And so the goal would be to look at the ceiling every now and again and adjust it as necessary. Right now, we think adequate, but we could provide for a small increase if that's what the public and the government would like to see that.
Now, another bit of information coming out from the review really citing and indicating that in the absence of official estimates and data, the participation rates among self-employed persons and the informal sector workers is said to be low. How low, and how can this be improved?
Yeah, so this is a challenge across the region. I mean, Anguilla is no different from anybody else. Some countries as low as 10%. In Anguilla, we estimated that self-employed was probably 10-15%, right, of those who are whether fishermen, taxi drivers, even some lawyers, doctors who work on their own, is very low. And sometimes people think, well, they're not going to get sick, they're not going to have any babies, or they don't need any support, when they get old. But the challenge we have here is that, when these people get older, they probably have no secure income in old age, many of them, right? And there's a challenge all over the region. And there are two things that we're trying to recommend to make this different. Well, three things. Education is number one, right? We're all getting older, and if we want to live comfortably when we cannot work anymore, we have to have that level of secure income. And yes, you may depend on your children, maybe your neighbors, or eventually the state. Right? It all comes back to society having to help you live comfortably. The first thing you want to do is to make it more easy for them to pay. Really flexible. Gone are the days when you have time to go down to the office and stand in line and pay with a cash or pay with a check. Right? You need to find a way to have that taxi driver who had a really good day, or the fisherman who had a really good weekend, just to go home, jump on his phone, and send $1,000 Social Security. Right? And you can pay all your money in 1 month. You can pay over 12 months. You can, as you earn more, you pay more, and then internally have Social Security allocate those funds the way they need to allocate them to cover your whole year. The second point is that we need to find a way to ensure that government-issued permits and licenses require compliance with Social Security. Gone are the days when it's difficult to assess who's paying, who's not paying. We believe that just as in the U.S. and Canada and the U.K., people have to pay their taxes. And so we need to find a way to ensure that the left arm of government and the right arm of government know what's happening. And so to renew your taxi license or to renew your lawyer's license or whatever you need to be a doctor in Anguilla, you have to show that you're compliant with Social Security contribution, and therefore you can renew or drive the bus or drive a taxi or go fishing.
Interesting. Over 60% of the fund's investments is in the form of a loan to the government of Anguilla, which is due to be repaid by 2041. Other investments diversified, and the overall rates of return, according to the Actuarial review, you consider to be low. And again, as you mentioned earlier, the administrative costs high. Could you just explain that for us, please?
Yeah, so whenever you have money you're saving, you really want to have a rate of return that's going to help the fund grow to avoid having to increase the contribution rate excessively in the future. And you have to deal with the hand that you're dealt. And the way the Anguilla government chose to deal with an issue with the bank, National Bank of Anguilla, and I think the other banks, back in maybe 15 years ago, was to have support from Social Security Board. So essentially, a large portion of the fund is now invested in a single investment that has a fixed rate of return of 3%. So we can't expect much larger returns from that. What we can, however, is to whatever else is invested, and there's investments in bonds, there's some deposits in the bank, there's some equities, both internationally and regionally, and there's real estate. And the goal would be to have those assets work as hard as possible to achieve rates of return that are available and that are higher. So we have equities. Those of us who follow the U.S. market know that the market is down. So I expect the returns to be down this year, significantly down in Anguilla. However, we're investing for the long term, right? And so whether it be government bonds across the region, whether it be equities in the U.S. market, and real estate in Anguilla, we are hoping that you're going to have up years and down years, but overall, you probably earn 6%, 7% on those investments. The one with the government of Anguilla expires in 2041, another 19 years to go. So the goal would be to make the other investments, pay attention to them, hire good managers, do good diligence to make sure that the promises that these companies have made are being kept to the benefit of the fund. Because if we have, the smaller the returns are, the larger the future contributions will have to be to remain sustainable.
Now, I looked at your 60-year projection of the fund, income, expenditure, and reserves. And I think this is something that caught the attention of many persons here in Anguilla when you presented to Parliament. The reserves, and I'm quoting here from the document, reserves projected to be depleted in 2037 under the best estimate scenario if the contribution rate is not increased and benefit reforms are not made. And I think, as I said, this stood out and this caught the attention very quickly of many, many persons here in Anguilla. And I just want you to expound and expand on this for us.
Yes, and this is the key result from the actuarial review, right? So when we look at what the fund is today, just over $350 million, we look at the projections for the population, for the economy, and for the investment return, the gap between income and expenditure is widening. And so what happens is that in a few years' time, you're going to have to start dipping into our savings, dipping into reserves to help pay benefits. Because benefits are increasing at a faster rate than contributions. And if you think about a family situation, you have bills to pay, so the income coming in is not enough. If you have savings, you have to now go and start drawing on your savings. If you keep drawing on your savings, eventually they will run out. And so the situation we see for the Social Security Fund is that if the benefits remain the same and the contribution rate remains the same, the fund will be depleted in the late 2030s. So probably 15 to 20 years from now, we project depletion. Now things could happen, right? Anguilla has seen many, many years of boom and several years of bust, right? Hopefully, we had some down years with COVID. Hopefully there's a boom coming. People get back and tourism gets back and other things spin off from those sectors. And we make projections of 3 different scenarios: an optimistic scenario, a pessimistic scenario, and the main one being what we call best estimate in the middle. And so we believe 2035 and 2040 is kind of the range when the fund will be depleted if nothing is done. And the key thing is if nothing is done. We've had some countries in the region who've kicked the can down the road and have waited until crisis time reached to make decisions on reform. The idea for Anguilla is that, we now have the projected outlook for 15 to 20 years of reserves. Let's try and push that out to 25, 30, 40 years by acting sooner rather than later. Because just as a diabetic might lose a toe, and then they lose a foot, and then they lose all the way up to the knee, right? The ramifications and the medicine that's required to cure the situation gets worse and worse as time goes on. And so the idea would be to to look at the fund, look at the option, and make the reform sooner rather than later.
So, what are some of the reforms now as we move into that area? Reforms and some of the key recommendations and why these are so important. Some of them having to come in force very, very quickly if we are to see any impact going forward.
Right. So going back to my example a while ago of the family, right? So you have, husband and wife or parents working, but they have to spend, right? So there are two ways of improving your situation when you're spending more than you're taking in. Right? You have to increase your income or reduce your expenditure. And the same goes for Social Security funds. You either have to find ways to increase income, which can be either the contribution rate or investment income. Those are the two main ones. On the benefit side, over 3/4 of the benefits are going towards the age pension. So that's where we have to focus. The other benefits, the sickness, maternity, disability, they're pretty small relative to age pension. So the focus has to be on, if you're going to reduce our long-term costs, you have to reduce the cost of future pension. And so you look at the formula. The formula right now is quite generous to short service. So 30% is earned after the first 10 years. If you think about that, and Anguilla is an in-migration country. A lot of people come to Anguilla at age 30, 40, 50 to work. It's still a generous benefit for short service. Those people who come at age 45 and 50 are getting a really, really jackpot type of benefit for very short contribution years. Right? And so one way of doing that is to change in the way pensions accrue over time to be more linear so that you really earn a pension more gradually over time. We can look at the age, make it in 66 or 67. In Barbados today, it's already 67. And they're thinking about possibly even going higher. Right? So that's a possibility. We could look at averaging wages over a longer period. So right now the formula says you look at the best 3 years over over your career. We could look at the average over 5 years, over 7 years, over 10 years. And in that way we would find we would have a better link between actual contribution and the pension you ultimately get. Right? So those are the main ones that we looked at. It's the pension formula, how old you are when you qualify for the benefit, and then on the income side, the contribution rate and investment income.
Yep, very interesting. And we know that Anguilla has one of the better funded Social Security package in the OECS, but it's one of only 2 OECS countries still to make these significant reforms to the system, with the aim of enhancing the long-term sustainability of the fund, and not turning the reserves that you have to then turn on the reserves to fund benefits. Now, as it relates to pension, and this comes up all the time, the last pension increase here by the fund was in 2018, and the review is calling for no increases in pension payments at this particular time. Why not?
So what we saw, so we have to balance the need for increases with actual inflation. And we looked at inflation. And inflation really, well, prior to this year, this year is a special year. But the last, the review period, 18, 19, 20, really had low inflation, below 1%. Well, some people will argue that's not really true. And the basket of goods that they use to measure inflation includes, oil and certain basket items and fuel and rent, computers and so on, right? So we have to go with what the statistics tell us. And so when we look at the fund's outlook and we look at the level of inflation, we do not recommend an adjustment now. But what we can do is when we start looking at the reforms that are going to be considered and what the options are, we can then discuss a pension adjustment that balances off, the increased cost that comes with a pension adjustment, with the reforms that are going to hopefully reduce costs or increase income over the long run.
Now, I'm aware that the board is preparing a funding policy and a benefits policy. What should be included in the funding and benefits policies?
Right. So, as somebody once said, if you fail to plan, you plan to fail. Right? And so the idea for these policies guide what we do. I mentioned the scheme is 40 years old. So the ILO came to the Caribbean 60 odd years ago, and they went to Guyana, then they went to Barbados and Jamaica, and they implemented these Social Security systems, right? We all very much look alike, but they all look like they looked back in the day, right? But life has changed, and so the benefits policy we mentioned is to look at each benefit we have today and decide whether or not they're still relevant as they are designed today, right? Survivor's benefit. I mean, things have changed from 50, 60 years ago. Most women did not work. The husbands were supposed to work and provide for the family and so on. Things have changed. Disability benefit. And are we monitoring properly? Why shouldn't somebody be able to work part-time if they've recovered from their stroke? Social Security says it's either all or nothing. If you can work for 2 days a week, we're going to cut you off, right? So there's things that need to be looked at to make sure benefits are still relevant to today's society. So the benefits review and the policy is aimed at that. And that would help drive the reforms as to how we can best provide benefits that are relevant for Anguilla. I mentioned one a while ago, unemployment. We still don't have that in Anguilla. But we know from hurricane many years ago and from COVID 2 years ago that the government and Social Security have to kick in a temporary program. There's certainly a need for that benefit. On the funding side, we'd like to have some targets, right? As to the actuary comes in, and the actuary will come in again in another year and a half, and look at this fund and say, well, how far do we want to be sustainable? Or above what rate do we not want the contributions to go? And we have to find a way so by having that target, we can say, well, the reforms we want to make in 2023 are going to be these 4 or 5 reforms, and they give us a benchmark, they give us a target funding level for at least 40 years. And so the idea is that instead of just doing something just to improve, you want to do something to achieve a certain level of funding or to achieve a certain level of coverage, right? So we have fixed goalposts we have goalposts that can move over time, but at least we know what we want to achieve by having these guidelines and these policies in place.
Now, you've also recommended, Mr. Osborne, the need for the fund to update and enhance its risk policy and its investment policy. Why?
Again, things happen, right? And the fund always has investment policy. Right? It's been there, has not been changed for several years. And so we would like every year or two that policy be looked at. It doesn't mean change. It just means that you look at it and you make sure it's relevant to today, and the board will sign off on either some changes, small changes, or leave it as is. So on the investment side, the asset mix is most critical, right? So there's some money in deposits, some money in bonds and equities. And so it's good to look at, how you might invest it today. Is it the best suited for the environment in which we now live? And if not, we reallocate those investments in a different way. That's the investment policy. The risk policy, as I said, things happen. And typically, bad things happen when they catch our attention, like COVID or investments not doing well. We've seen the market in the U.S. Not doing so well this year. The idea is to understand what risks the fund faces and also to have some predetermined decisions or behaviors that are going to happen if something happens. I'll tell you a story, and this is an Anguilla story. There was money invested in the U.S. stock market many years ago, and when the stock market crashed, unfortunately, a decision was made to withdraw money from the market when the market was at the bottom. 6 months later, it came back to where it was before. So Anguilla lost out on that particular decision, right? So we need to have these policies when it comes to investment, compliance, self-employed persons, everything. Even if it's a hurricane disaster, how do we behave? How do we react when certain things happen? And so there's work, I think, going on that policy. And the hope is that better decisions are made when you have these 4 policies in place because you've thought about things in advance, you're prepared for these things should they happen, and you know how to behave. On the flip side, I'll just say one last thing. In good times, a lot of us tend to only focus on bad times and prepare for bad times. But we also have to be careful that when we we have good times, we don't splurge and we don't overspend, right? And so by having these policies in place, we can make sure that in both good and bad times, we behave prudently and we behave having thought about the actions we're about to take and the implications that can happen for whatever we do.
Now, in terms of the funding policy, can workers and employers afford a rate increase in the current environment, and can current revenues and liquid assets meet expenditure in the short term? And are there any suitable investment opportunities for additional cash surplus? These are some of the questions I know would be floating around.
Yeah, it's a tough time. It's a tough time right now to talk about increasing contributions on employers and increasing contributions on workers, But unfortunately, we have to balance the future with the current, it's easy for me to say, well, we have to raise the rate now because 30 years from now there'll be no money left. And so we have to find a way to balance the intake and the outgo. And so what we found across the region, and just for information, so Anguilla's rate is 10%. It has been 10% for 40 years. Right now in the Caribbean, Barbados, they're paying 18.25%, what Anguilla now pays at 10%. They're also paying Barbados another 2% for unemployment and severance. So together, employers and employees pay 20.25% for NI, for Social Security benefits. What we have now is that Dominica is moving gradually in small steps to 15%. Montserrat is moving to 15% in small steps. Antigua is moving to 16% in small steps. Right? So, and I expect in the coming years, Grenada will probably announce something similar, as will St. Vincent, as will St. Kitts. Everybody is facing the same challenges of aging and a fund situation where income is less than outgo. And to solve that, contribution rate is one of the fixes necessary. And so while I understand the situation of people being stretched, especially with inflation, price of fuel, the price of food going up, we also have to think about our income security as we get older and find a way to ensure that we can reduce the cost of running Social Security so more money goes towards investment, increase the return while looking at long-term costs and making the fund a little bit less generous, especially to those who have short service.
And I want to move now to the governance culture, good governance and political interference and following the good governance practices as laid out by the International Social Security Association. The good governance guidelines that were published in 2011, speaking to the questions such as accountability, transparency, predictability, and participation.
Yeah, so, good governance is the word we use in the report. I like to think of the term honest and responsible government. And I say that because a lot of times we think about governance or good governance as people, government stealing or being corrupt or doing naughty things. But there's a flip side. We want governments to act prudently and before bad things happen, right? And so this organization that within the International Labour Office, the ILO, it's called ISA for short, the International Social Security Association. And they put their heads together many years ago, and they came up with some good governance guidelines for Social Security system. And they're really, really powerful, and we believe that if, and will Social Security, like others in the region, can put these in place and practice them day in, day out, it would certainly enhance not only the confidence of the fund being sustainable, but actually the fund being sustainable for the long term. Keith, I've been around over 20 years doing what I do, and I've seen good, I've seen bad, and I've seen ugly. Politics drives a lot of things. Fortunately, the overseas territories are on the better end of the spectrum when it comes to good governance, right? But still, there's always a need for transparency and accountability. So I presented in the Parliament, the Legislative Council, a few months ago, which was that the report was done. Within a few months, it was tabled and shared with the general public. Excellent way to go. So the public can be aware of what you're doing today in your program is sharing with Anguillians and those who are concerned about the fund for the long term, sharing with at today, what the future looks like if nothing is done, and what can be done to make it stronger. Being predictable, we don't really want to make changes that are going to affect a 64-year-old from getting a much smaller benefit. Anything that needs to be done should be done gradually so that those people who are close to retirement aren't affected significantly. Participation. Right? Participation means that whenever we come to do reform, we involve the people. The board is a tripartite board. It's supposed to represent us from government, from employers, and from labor. So around the table, we have, all key stakeholders, and their input goes a long way into making these policy decisions as to how the fund will be reformed and managed going forward. And the last of the 5 points is dynamism. As I mentioned earlier, the system should evolve as life and culture and society changes. So, we're having fewer children. The economy is now moving to where we have more self-employed and formal sector workers. The Social Security scheme needs to adjust and adapt and to remain relevant to all sectors, right? And so with a document of good governance guidelines, and also will include, for example, the board members, the role of the minister, the powers of the minister. A lot of times people go on board and don't appreciate what their role is, what the role of the minister is, and so on. And so just as many people have a Bible, that they follow and that we guide our behavior by, Social Security Board and probably every government institution should also have some good governance guidelines that explain how the board is selected in terms of reference for the chairman, for the director, for certain board committees. Whenever a new board member comes on or a new board is in place, there's a bunch of orientation. It could be a half day or 1 day. They understand the system, right? And insert on a board member code of conduct. And we're a small place. Some things come before the board where the person is conflicted. Either their brother, their sister, their wife, or their family member could be involved in the decision, right? How do you behave when that conflict arises around the board table? And so these things we believe should be in a little manual that are clear to both the board member, to the director, to the minister, and the public. Right? So therefore the public can expect their leaders and their board members to behave in a certain way that's certainly in the best interest of the Social Security Board and by extension, best interest of Anguilla.
And you've stated in your actuarial review, Mr. Osborne, that there's need also for the publication of the actuarial review. That should be in the public space. You've advocated very strongly for that. And why do you say this, and why do you think this is so important?
In short, the people need to know, right? I mean, the SSB collects money every month from workers and employers. It pays benefits to thousands of people every month, and it's the people's money. Right? The people need to know how the money has been managed, where it's invested, and what the future looks like. And so, the current website, social security, we're in the age now where websites are important and social media is important. The Anguilla Social Security Board has their annual report online up to at least 2015. They've fallen behind in the most recent years, but the financial statements have been audited, and for the most part, they're online. The Actuarial review also needs to go online. So once we table in Parliament, and there's a public discussion where I presented, and there's some questions from House members. It's a document that the people should be aware of, at least read the executive summary, understand where the fund is, understand what the outlook is, and when it comes time to participate in discussions about reform, how to fix your fund, you'll be better educated, better informed, and so together we can make those decisions that are going to save the fund for children and grandchildren to come.
Now, I want you to recap for us, and I'll do that after my next couple of questions, the best estimate projects. And in terms of the population, the population projection, the 2011 census, Anguilla's population was put at 13,572. and the estimated mid-2020 population was 15,500. I just want you to share with us and explain to us, based on the actuarial review, how do you factor in the population, the size of population, into all of this, and how this directly relates to and ties back to the fund?
Right. So one of the key ingredients, actually probably the most important ingredient for a sustainable system, is the economy. Right? How well is the economy growing and working? And it starts with the population, right? Or what we see in Anguilla has grown tremendously in the last 60 years. You know, in 1960 there were like 6,000 people in Anguilla. Now it's over 18,000, right? So sorry, over 14,000. So what we've seen is that there are periods of boom and periods of bust. And so just back around 2008, 2009, the population grew significantly as the demand for labor because of big projects was there, right? However, once the economy crashed, 2011, the population declined as work dried up, and it's been growing at a slower pace since then. We believe now just under 16 or about 16,000. There's been no census in the last year because of COVID. It was due in 2021, and hopefully it will be done soon. But if you think about Social Security, money comes in from workers, right? Workers drive the economy. And so if there are new projects, if there are more projects, the goal is to have more people working for higher pay. And so when we project over 60 years, there's much uncertainty in those projections, right? Things could be really, really good, in which case the fund will look really, really good for a long time. Or things could be bad, right? There's another COVID, could be a hurricane, it could be something that makes Anguilla not grow above the projection, which then places more demand on a smaller economy. And so that's why we just keep projecting. We do projections of different scenarios, positive, negative. It's easy to sit and be positive, but life happens. And then so we look at all scenarios. Every 3 years, the review is done again to look at to see how you've changed in 3 years and what the outlook looks like. And so every 3 years, a fresh look at the future. So I'll say one more thing. There are 4 ingredients we believe for success. I mentioned the first one being the economy, healthy and growing economy. The second one is good design. Good design means that, as I said before several times, SSB needs to be relevant to today's lifestyle, to today's economy, the social fabric of Anguilla, demographics, and so on. The third one is an effective and efficient system of administration, whether it be Social Security being lower cost, being more efficient at processing claims, and also government and Social Security working together to improve compliance and overall efficiencies within Anguilla. And the fourth ingredient, which I touched on briefly, was what I call honest and responsible governance. So I think slowly, there are some things that the board can control, there are some things that the government has more control over. So all stakeholders need to be around the table, working in the best interest of Anguilla and the best interest of the fund.
And just for the record, I looked quickly at in the actual review, the summary of investments as of December 2020, certificates of deposits, 19.7 million, and these are all EC currency. Bonds, 22.9 million, loans, 214.9 million, equities, 58.9 million, and real estate, 18.9 million, for a total of 335.2 million. 65% of the investments in loans, assets, 18% of investments in equities, 7% in bonds. And in terms of the location investments, 76% locally, 16% internationally, and 8% regionally. Just some of the statistics coming out from the review. As it relates to the ACIDCO, and you've called for a review, a comprehensive review of ACIDCO, and I want you to just share a bit more on this for us, please.
Yeah, so just for information, ACIDCO is a subsidiary of the Social Security Board, and it was created in 2009 with the purpose of developing property, some on behalf of government, some on behalf of Social Security funds, as a way of improving infrastructure in Anguilla, as well as creating return on investment for the fund. Unfortunately, that expectation has not transpired. There are two investments made recently, but there was one made many years ago in Cinnamon Reef property, which has not worked out well. And so the recommendation simply was that there's nothing that the CIDCO was designed to do that the Social Security Board could not do directly. And so the recommendation is there's no longer a need for this subsidiary company, and the board hopefully can decide whether or not it is going to remain. I mean, the board can keep it and change the purpose of a CIDCO. We have only two other countries in the region have something similar, Trinidad and St. Lucia, with mixed results. But what we would like to see really is the Social Security Board focus on what their core business is. And sometimes we get distracted trying to make an extra dollar by putting in place other systems to improve our investment. And in this particular case, it has not materialized what it set out to do. And so the board hopefully will make a decision as to whether they keep a CIDCO, whether they keep and revise its objectives and how it's managed, or dissolve the CIDCO. Right? We only raised it because it was a red flag, and so no specific recommendation was made in the review, left in the hands of the board and the government to decide.
If reforms are not made soon, the Social Security Fund could enter a crisis state in the next 10 years, where draconian measures will be required. A quote from the Actuarial Review: contribution rate increase is a must to ensure continued payments of benefits without government support. And a specific recommendation, as we ask you, Mr. Osborne, to do a quick summary on the recommendations coming out from the latest Actuarial Review. And the specific recommendation: gradually increase the contribution rate to 12% by 4 annual adjustments of 0.5% each year, starting in 2023.
Yeah, so Keith, I'll tell you a short story, an Antigua story. Antigua, unfortunately, was paying pension a little late. There was a case last year where an elderly man had no pension in his account, and he stole some food items from a store and was caught and went before a magistrate. Right? And he told the magistrate, he's old, he's hungry, didn't have any money, and that's why he did it. He was wrong. We never want to get in Anguilla. We never want to get to a point where pensions are either paid late because they have no money, or they can't be paid at all. In Greece and Russia, they've had defaults before. We don't want to get there. And so in Montserrat, they had to make some drastic changes the other day on April 1st, where essentially there are no new pensioners for 5 years. It took a long time to make decisions, and their fund had reached a crisis stage. They would have been depleted within 4 or 5 years, and there had to take a bitter and tough decision. We don't want to get there. So the idea is that the fund, that the board look now at some changes that are going to be small initially, but over a period of time they'll phase in and help enhance sustainability. So as you mentioned, contribution rate increase to at least 12%, possibly even 15% in the next 10 years. And that could be done by 0.5% every year. So it's really a small extra contribution for workers and a small extra contribution for employees. And the pension formula, as I mentioned earlier, revised the pension formula. We also recommended adding an employment benefit with a 1% contribution rate. So yes, higher contribution, but as we know, even in regular times, folks lose their jobs, whether it be the off-season tourist sector or a company has a slow month or slow period and they lay off, right? Have that in place formally on employment. Now, we want to recommend self-employed people. Let's find a new way of having them pay, link their compliance with their ability to practice their trade, and ensure, not merely for their sake, but they can have a benefit when they get older and they can't work anymore. We talk about reducing costs. As the administration mentioned earlier, costs are high. As well as the Security Board, find a way to bring the cost of running the organization down. And finally, as you mentioned earlier, publish the report. So the efforts are all designed to improve the design of the system for enhanced sustainability and to improve the operation to make it more lean, make it more efficient, so more money goes towards paying benefits.
Derek Osborne, Actuary from Lifeworks Limited, partner there in Nassau, Bahamas, and the man responsible, along with his colleague, for presenting the latest actuarial review. I want to thank you so very much, Mr. Osborne, for taking time out this morning to join us and share with us the information. We certainly appreciate it very much, and I'm sure the people involved, all the stakeholders, would have benefited from your information, your knowledge, and what you've shared with the people of Anguilla today. So again, thank you so very much for joining us here in Talk Anguilla Rebranded Part 2 today.
Mr. Graves, you're very, very welcome. It's a pleasure to be with you, and hopefully one day we can be in person and we can have those discussions, with a live audience, and we can really take the questions and understand the feelings of Anguillians, both home and abroad.
All right. Thank you so very much, Mr. Osborne. Thank you.
You're welcome. Thank you very much.
Okay. Folks, there you had it. Derek Osborne, the actuary from Lifeworks Limited, out of Nassau, Bahamas. He's in Antigua and Barbuda today attending a conference, hence we had to take him live via the telephone. We understand that Mr. Osborne should be in Anguilla sometime in the not-too-distant future to work alongside the Social Security Board. We'll take a break at this time, and when we come back, we'll be joined by the